Yo, what is up, everyone? My name is Dom, and we're going to talk about unusual options activity. Alright, let's kick it off with the disclaimer. So, disclaimer, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to making an investment. One must affirm that only due diligence and realize all investments carry risk. There's no guarantee of profit, everyone. Okay, so, first, now I'm bringing up a couple interesting ones today. You know, they're both in the retail sector. First one I want to talk about is L Brands. Now, if you come down here to the time sales, you know, you can see that somebody came in and got 10,000 of these June 11th 68-73 call spread. So they bought the 68 call and they sold the 73 call. That's what I talk about on this channel that I do all the time. I do vertical spreads where I buy an at the money call and I sell an out of the money call against the at the money call. So I really like somebody who is doing a vertical spread here because it cuts down on your time decay. You know, this is a huge order here. So they paid out $1.53 in premium and they collected about 47 cents. So they're paying out a little over $1 in premium for 10,000 contracts. That's $1 million order, everyone. Now, you know, how we are able to pick that up is, you know, you come here to these June 11th ones, you know, you can scan for this option volume and, you know, a bunch of different scanners, you know, whether it's online or through your own brokerage platform and stuff. You know, there's 10,000 contracts traded here. So this is them buying the June 11th 68 call and selling the June 11th 73 call. You know, there's not a whole lot of options traded here in this expiry week. And, you know, all of a sudden just 10,000 contracts are bought and sold here because they're doing a vertical spread, and we're able to gather that analysis from the time sales down below, something that I always do. Now, let's take a look at the chart here. For those of you who don't know, this is L Brands. This is retail clothing, Victoria's Secret, I think Bath and Body Works. So, you know, just a conglomerate of different retailers. Now, you know, this one hasn't had much of a pullback here. You know, the high is about 72. It's down to 66. You know, it is 6 points off its high. You know, it is at the 50-day moving average. You know, if you take a look at this chart here, it tends to follow this 50-day moving average pretty closely. You know, this thing has underperformed for, you know, quite a while now. You know, I don't know if we can make it back to this $100 high here. You know, that would be incredible if we can. But, you know, we've had a huge run on this one. So I'm a little bit nervous about this one. I'm not in any of these options yet that I'm talking about today. You know, a kind of a tactical move today. I did not put on any positions. I do not really like, you know, buying on days when the S&P is up 1%. Kind of just makes me a little nervous. So kind of a tactical play, you know, hoping to get in tomorrow into some of these a bit lower. Now, next one I want to bring up is, again, a retailer, Gap. Now, this one is a little more interesting because they're coming in and getting these May 28th, so 33-36 vertical spread. So they're buying the 33 call and then they're shorting the 36 call against it. So they're paying out $1.18 in premium for the 33 call, and they're collecting about 36 cents. 36 cents on the 36 strike call. So, you know, they're laying out a little under $1 here for about 5,000 per. They're laying out about $1 per contract. They got about 5,000 here, so that's about a $400,000 order for some short term. These expire this Friday, and they're out of the money too. Gap is at about 32. The stock was at about 32.41 when this person put on the trade here. So, you know, this is extremely short term, extremely unusual, and same goes for the last trade too. We know that it's an opening order because the trade size here is larger than the open interest of the contract. So 1,500 and 600 is less than 5,000, and they bought this vertical spread, so we know it's a buy to open order for sure. So, you know, this is a really interesting trade. You know, this is another one where, you know, I saw it. I did not put this trade on during the day. You know, I guess this is kind of just one to watch and, you know, see if this trade plays out. This is extremely short term here. Like that they were doing a vertical spread on this short term of an option because it really cuts down on the time decay, especially on these short term options. So, you know, very interesting and unusual trade to say the least. Now, you know, Gap, I wouldn't mind going out a little further with this one. You know, this one has had a nicer pullback than, what do you call it, L Brands. And if I'm not mistaken, I think Gap actually has earnings. I'll have to double check when these earnings are. I'm not 100% sure. Matter of fact, we could check. Yeah, so it looks like they have earnings on May 27th after the close. So, now that I'm putting the pieces together here, this is definitely an earnings play. This is a little bit risky. Doing earnings plays, it either goes one way or the other. The trade either works or it doesn't work, especially with these short-term options. But the fact that somebody's laying out $400,000 on these options makes me to believe that they think they're going to have a good quarter. That is for sure. So thanks for everyone who's been subscribing. I really appreciate it. I hope you guys are liking the content. I try to bring you guys the best trades that I'm putting on, or that I'm looking at, and then I find throughout the day. So thanks for everyone who's been subscribing. I really appreciate it. Make sure you keep the subscribing up, and we'll see you in the next one, everyone.